G'day guys, welcome to Pumped on Properties November Australian property market update. Now, for the first time in a long time that I can remember, every capital city went up in the last month, as well as every capital city in Australia is now recording positive growth over the last 12 months. But let's also get real. Some of these markets are on absolute fire at the moment. The likes of Brisbane, Perth, and Darwin are all recording double-digit price growth and heading in the direction for another incredible year. Now, if we look at the growth rates over the last month, it was super clear to see that Brisbane, Perth, Adelaide, and Darwin were the top performers. But what's interesting is Melbourne is starting for the first time in many years to see a little resurgence or a bump in the property market down there. And when we look at the 12-month growth rates, the story is actually extremely similar, with Brisbane, Perth, Adelaide, and Darwin completely leading the way. Now, if we look at the fundamentals driving these four markets at the moment, it comes down to a few simple things. One, each of these markets have supply and demand issues with not enough houses being created for the people that want to move or live there at the moment. Secondly, incomes in all of these markets are extremely high, with in fact Perth, Adelaide, and Brisbane having the highest average household incomes in Australia at this stage of the cycle. On top of this, all of these markets have chronically undersupplied vacancy rates at the moment, with meaningful and significant infrastructure projects coming in the short term as well as the medium term. And then on top of that, you add the sprinkle of speculation, which we know in Australia that Australian investors love buying the markets that are winning in the short term. And so many people are flocking particularly to Brisbane, Darwin, and Perth at the moment. Now, when we look at rental vacancy rates across the country over the month of November, it's super clear to see that all of Australia right now is chronically undersupplied in these capital cities because the vacancy rates are sitting below 2% right now. Now, in terms of the auction clearance rates around the country, they're nothing to write home about at the moment. Obviously, they look quite strong in Brisbane and Adelaide, but outside of that, they're relatively weak across the country, which is actually super interesting because from my experience, particularly in the Brisbane and the Melbourne markets at the moment, good quality homes are literally selling within 1 to 3 days of the day that they come online, which to me shows the coming strength of some of these markets or some of these suburbs that other people might have missed over the last 5 years around the country. Now, what I love about Australia is when things are going good, we obviously think and expect it to go bad, which I think is a really reasonable investment strategy and a really good way that protects our country versus some of the other countries around the world that have speculated more in the current market or more in the past than we have. Now, according to Trading Economics, confidence was actually down from 95 points in September to about 91 points in October. So again, it's probably been the strongest month on record that we've had since the start of COVID across the country, but good old Aussies are feeling worse about it, which is fantastic as usual. Now, when we look at the unemployment rates, according to the Australian Bureau of Statistics, they are still well below their long-term average, sitting at just 4.3% right now, with the longer-term average, according to the Australian Bureau of Statistics, over the last 35 years in Australia, sitting at about 6.64%. Now, when it comes to who's borrowing the money at the moment, I think we're going to see a massive change over the next 12 months based on the incredible first home buyers grants that the Australian government and the state governments have just brought into the market from the 1st of October forward. Now, at the moment, we're seeing a pretty significant amount of the property being purchased in Australia. In fact, 62% of that property being picked up by mums and dads and first home buyers, with currently 38% of the market going to investors. Now, what I would assume now that first home buyers grants have gone up across the entire country, with things like free stamp duty in some states, free lender's mortgage insurance, as little as 5% deposits, and the thresholds going up significantly, is a massive wave of first home buyers coming back into the market, which is exactly what the Australian government's right now, which is continuing to throw gas on the fire, which is the Australian market. Now, not only will that have a super positive effect on the cheaper parts of the Australian market, but as people that are upgrading from their first homes into their second homes or from their second homes to their dream homes, it's going to bump the market up all the way from the bottom, which based on the last 30 years of history has happened every single time they've done this in the last 30 years in Australia. Now, when we look at interest rates across the country over the last month, I don't know about you guys, but I'm sitting at between 5.5 to about 6.5% on my rates on my properties right now. I could probably start to sharpen them a bit, but the Reserve Bank just went through a meeting. They decided to keep the cash rate on hold for now, but there is the potential to follow the US into 2026 and maybe see rates decline as many as 1, if not 2 more times between now and the end of 2026. But they've been saying those sorts of things for a long time now, and maybe with inflation numbers jumping slightly in the last month or so, we might see them keep that cash rate on hold a little while. Now, when we look at the total number of listings across the country in the last month or so, listings are actually up, which is exactly what we'd expect going into the spring selling season. It's been a refreshing change that there's actually, for the first time in quite a while, more properties coming onto the market so that investors like myself and our clients can actually go out there and have choice in the market with more property to look at each week. Now, the last thing I wanted to touch on before I get into some of the positive news and gold nuggets over the month of November is just distressed listings. Now, again, it wasn't that long ago that they were talking about the mortgage cliff in Australia, where when we fell off and all of those people went from super low fixed rates at like 2 and 3% to 7% rates, that the Australian property market bubble was going to pop and everything would go down and it would be absolutely horrible. Right now, distressed listings year on year, so from October last year to October this year, are down by 29.5%. Now, that is completely opposite to what every single news outlet in Australia talked about for 2 out of the last 3 years. And I think it's important at the moment to see where they're bashing in the Australian property space, and that is clearly the Melbourne market. Now, we all know that Melbourne a few years ago was in big trouble with all of those Australians leaving to Perth and to Brisbane or coming up here to the beautiful Sunshine Coast with us. But what the media hasn't been great in communicating is the fact that 150,000 people have been moving back into Melbourne for the last 3 years. And over the next 5 years, they're expecting the city to go from 5.4 to 5.5 million people today to almost 7 million people within 5 years. Now, for those of you that have been following our content for a little while, you would have heard me talk a huge amount about Brisbane over the last 10 years. Then about 7 to 8 years ago, I started to talk about the Sunshine Coast and Gold Coast markets. About 4 odd years ago, we started to talk about Townsville. About 5 years ago, we started to talk about Perth. About a year ago, we talked about the coming boom in Darwin, and now we're talking about Melbourne. Now, this isn't based on us just putting our finger in the air and hoping that something sticks to it and we find the next big winner. The way that we're able to look at markets and predict the next big winner is based purely on history and real estate science. And for me right now, when the longer term difference between Sydney and Melbourne has historically sat at 29%, and right now it's 60% in the average suburb, but in many of the suburbs that I'm buying, there's literally 100% difference between Sydney and Melbourne right now. Or I'm looking at houses in Brisbane that are literally $300,000 or $400,000 in the same location, more expensive than Melbourne. Then alarm bells start going off in my head, and that starts to look like an opportunity. Now, I'm absolutely kicking myself because I completely missed the Perth boom. Even though I was pre-approved and completely ready to buy a couple of properties there, I didn't take that action. But what I won't do for my family or for our future is miss what's coming in Melbourne. Now, I know that Darwin, Perth, Brisbane and Adelaide look shiny right now, but if you can take a step back and look at things from more like a 10 to 15 year approach to investing, Melbourne is going to be phenomenal, and I have never seen it statistically look this undervalued. G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just want to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom.